Tesla 5-to-1 stock split. What's going to happen and what to do next? Well, that's what I will try to answer in this video, so stay tuned. Hey there my people, welcome back to my channel once again, and today we are going to talk about Tesla and its 5-to-1 stock split. So in today's video we'll be talking about what exactly a stock split is, how it works and why the companies do it, and some of the consequences which are actually happening right now because of this announcement. And then last but not the least, my personal opinion and my actions regarding Tesla. So let's jump right into the video. So let's first look at the definition of stock split. So what exactly stock split is? Investopedia says that a stock split is when a company divides the existing shares of its stock into multiple new shares to boost the stock's liquidity, which we'll get to in a moment. Although the number of shares outstanding increases by a specific multiple, the total dollar value of the share remains the same compared to pre-split amounts, which also I will explain in a moment, because the split does not add any real value. The most common split ratios are 2-for-1 or 3-for-1. Yeah, that's the most common, but in this case Tesla is going for 5:1, which means that the stockholder will have 2 or 3 shares, in Tesla's case 5 shares, respectively for every share held earlier. So that means that in case of Tesla, investors who had 1 share of Tesla will now have 5 shares of Tesla, and if 1 share was around $1,500, now they will have 5 shares of worth $300 each. So this is what stock split actually is. So it is not changing the real value, we are just dividing it into further pieces, let's say. So if you have an apple and if you want to cut the apple into 4 pieces, and if you join that apple back again, it's still 1 apple. So I hope you guys understood, and it's quite easy to understand this way. So why actually companies do this stock split? Well, I can explain you 2 main reasons behind this policy. So the first one is quite simple and logical to understand, and it is, so when the price of a particular stock reaches to a certain level when it can be considered as expensive for average retail investors like you and me, then the companies realize this and they do this stock split. And there is also a psychological touch to this, because for example, if I have just $2,000 in my bank account or in my trading account and I have to invest in Tesla, I will see that I can buy only 1 share of Tesla with $1,600. So I'm investing $1,600 and I see that I can buy only 1 share. Well, it is quite unsettling to my brain and my emotions, and as we know that stock market is very emotional and also investors are emotional, so this is quite unsettling. Yes, I know nowadays brokers provide this leverage of buying fractional shares, but to be honest guys, these leverage of buying fractional shares are mostly in the US based brokers, okay? Some brokers also in Europe, the third-party brokers, do have this facility, but for example, if your depot account or your trading account is via bank, then most of the banks in Europe don't provide this facility, for example in my case. And also the psychological factor behind this is that people usually don't feel comfortable to buy 0.5 or 0.3 or 0.7 or 0.8 share of a company, because like I said, it is unpleasant to see a fractional share with numbers like in decimal, and you want to see whole numbers like 1, 2, 3, 4. So this is what is one of the reasons behind doing a stock split as well. So the second reason is quite a technical one, but really simple to understand as well. So for instance, if the company decides to do a stock split of 2:1, so that means now the company has 1 extra share in the market out there. Now of course the price has also reduced, but they have 1 extra share outstanding in the market to be traded, to be available for trading, and this means liquidity. So they have increased the liquidity, which in turn means that they have given much more shares out there for trading, and this makes it easier for the traders to trade, because when the number of shares outstanding in the market is quite high, then the trading becomes much easier for the traders. For instance, you might have faced this problem that when you are trying to buy or sell a particular stock through your broker, the transaction might take some delay or it might happen after some time. This happens because one reason is that the demand is really high, but the number of shares outstanding in the market are not so many. And this also results in, of course, the spike in the price, but also such delays. I mean, then the transaction is not so fluid. Yeah, this is one of the reasons, just one of the reasons, which is a benefit of higher liquidity. So And also it increases the bid to ask price, which simply means that it enhances the demand to supply ratio. So there are more number of shares, and if the demand is really high, then of course the demand increases and the supply has already increased after the stock split. So in short, it actually is beneficial for both the company and as well as investors. I mean, investors who are willing to buy the stock at a cheaper price. I mean, technically it's not cheap, but the price has reduced. So it is beneficial for both. Now let's look at some of the consequences as a result of this announcement. So here is one of the consequences. The announcement of the Tesla stock split was announced on 11th of August, and as you can see, since then the stock price for Tesla has been rising consistently, and this is one of the positive consequences for the current shareholders. But that also means that the stock has become more overvalued, and I'm personally not a big fan of overvalued stocks. If you have seen my previous videos, especially if you see Tesla's current PE ratio, it is sitting at 854. And especially if you compare its current PE ratio with its trailing PE ratio and forward PE ratio, it is quite visible that all the success and the optimism from the investors for Tesla has already been baked into the stock price of the company. So according to me, it is currently really overvalued, but there's also another side to it. And the other side of Tesla being an overvalued stock is actually the people behind it as investors, especially people like Katie Wood, who had been preaching Tesla since years and still think that Tesla can reach a value of $6,800, and that's a bearish case in coming 5 to 10 years. But of course this was before the stock split, so now actually I'm eager to know her analysis. But anyhow, if you still take that growth rate into consideration, as the valuation of the company remains unchanged, even after a stock split, the Tesla stock price can reach up to $1,400, and that's quite amazing, guys. Especially when Tesla has expanded its business by entering into renewable energy sector as well, by offering solar panel systems with battery storage for commercial and residential buildings. That growth rate for its stock price is really achievable. So this brings us to my opinion on Tesla and what my future actions might look like regarding Tesla. So like I said, that considering the price to earnings ratio, price to sales ratio with respect to its market capitalization, it seems quite overvalued. But let's say if I still would want to experiment with this stock, because the fundamentals of the company are quite strong. For example, the balance sheet of the company, balancing its assets versus its liabilities, it's quite good. The current ratio stands at more than 1, and also the negative cash flow of the company is now in positive, so this is quite a good factor to consider. So in short, I want to say I wouldn't do this experiment or invest in Tesla if I didn't see good fundamentals around the company, or if I didn't see any positive outcome from my investment. So I have done my research, and that's what I ask you to do as well. So let's say if I would invest in Tesla, if I would do this experiment, then I would invest before the stock split. Now guys, I'm not saying in any way, or I'm not discouraging those people who were supposed to or who were planning to invest after the stock split because of not enough money, or who didn't have this leverage of fractional shares. I'm not saying that at all, because ultimately Tesla will be a growth stock. Yes, there might be a huge volatility in the coming weeks because of this news and even after the stock split, so please be aware. If you don't want to get tensed with all this volatility, then stay away from it. But anyways, so just wanted to warn you guys. So let's say if I would, then I would do before the stock split, just because I want to take this advantage of that huge spike which might come in the volume after the stock split. Because like I said, that there were many people out there who wanted to invest in Tesla when it was at $500, but they thought that it's overvalued. But then this hype and the good positivity about Tesla came into the picture out in the public, and then you saw what happened. So $1,000, $1,500, and so on and so on. So there are many people who missed out on this opportunity, and they were looking out for this opportunity that when Tesla comes back to this $200 to $500 range, even if they have to sell their house, they would buy it. So now this is the time when it's gonna happen. Of course, it's not getting any cheaper, so it is just that the split is happening, the value of the company remains the same. So these people will be jumping on this stock and that might create a huge volume spike and probably a spike in the stock price as well. So the only reason why I would be investing before the stock split is to take advantage of this huge spike which might be coming soon, and that's the only reason. So no, I'm not saying that don't buy after the stock split. No, I am not even saying that buy now. That's just my opinion, guys. I'm not a financial advisor. I can be 100% wrong, and this is just my opinion. So this is what I wanted to tell you guys, and I won't talk about over evaluation because I don't want to annoy those Tesla fans out there. So this is up to you. This is your decision. Please take care of your money because it's worth spending when you are really have done your research and when you are sure about your investment. So that's it, and that's all for today, guys. I really hope that you liked this video and you found this video quite informational and would help you to make your own decision for Tesla in this case. So see you in the next one. Till then, stay safe, stay healthy, and ciao.